None of the following should be taken as business, investment, legal, or tax advice. Enjoy the podcast. Hello and welcome to the SwapSpace channel and to the SwapSpace Huddle podcast, brought to you by SwapSpace, the leading crypto exchange aggregator with over 4,000 assets available to buy, sell, and swap at your disposal. Link in the description below. So today we're going to be talking about the main topics of on-chain privacy and social trading. And for that, we have our dear guest, Max. Max, an introduction from yourself.
Yeah. Hi, everyone. My name is Max. I'm a co-founder of two projects, Arcane Finance, which is a privacy-preserving DEX and like launchpad on Alio Network, and also a new kind of stealth protocol that hasn't yet been announced. But yeah, it will be called Trend.Run, which is a social copy trading on-chain protocol.
Yeah, the reason why I didn't ask you about all of that beforehand, because I'm not so well versed in these topics, but it will be an interesting thing to learn them as a newbie from you here. So just imagine that I'm your ideal client, I'm your target audience, and you're going to be doing that pitch to me. And I guess that'll be like the best way to sort of present those products. And yeah.
Yeah, absolutely. So basically, when you...
Hold on.
Oh, sorry.
There is a recurring topic that I missed a little bit here because I got so excited to learn about those new projects. But we have a recurring theme on our podcast where I ask the guest how they got into crypto, what made them stay, what you love the most about crypto, and that sort of stuff. So how did you get into crypto, and yeah, everything else that I asked?
Yeah, I think I first touched crypto back in 2014 or so. Wow. So yeah, I had a software engineering background, and we had like a dev shop company that used to build different products for clients. And one of the products back then was a crypto exchange, kind of centralized crypto exchange. And I remember I was paid in Bitcoins back then.
Really?
And I sold them for $200.
Oh my god.
Yeah. And I was like,
well, you couldn't have known.
Yeah. Well, I should have known. Yeah. That would be like very profitable project if I sold like at 100K or so.
How much Bitcoin was that back then?
Yeah, it was $200 basically per Bitcoin, 250 or so, something close to that.
God.
That it was
would have been a millionaire today.
Yeah, probably, yeah. Yeah, for sure.
Does it bug you out knowing that you?
Oh no, not really. Just like, yeah, I was thinking about it quite a lot. It's like, what if I like would hold this money and like never sell it? But realistically, when you see like all the ups and downs in crypto market, the chance that I would like sell it low or like buy high, sell low, all this like psychological pressure from the market. Yeah, I think that's it's hard. It's impossible to predict where this or that currency goes.
Unless you forgot about it for a very long time, and then you kind of saw in the news that Bitcoin got up to like $1,000, and even then, if you went back and you thought, okay, so I had that Bitcoin which was worth about $200,
mm-hmm.
It gets up to $500, and then you would be immediately compelled to sell it because, again, you got that like 2x, 3x investment from the Bitcoin mm-hmm. that you had. But you would have never known that it would go up to like 100K, which would be just insanity. Yeah. It was a very interesting thing to learn that you got into crypto so early.
Yeah, but then I was on and off in crypto, so I wasn't like full time in crypto. So just like doing some projects for crypto companies, but full time I got full time from the end of 2021. I think I was like the very end of the previous bull run got me into crypto, and since then I was more or less full time and working on various stuff, mostly working on our own projects. So we have like two co-founders.
Mm-hmm.
I have a co-founder, and we are launching various stuff like fundraising.
So how is it going for you right now? Because I imagine you had a lot of previous experience with all the projects that you have been working in, and again, 2014 is such an early time to get into crypto. You're like one of the pioneers of that era that is just beginning to thrive right now, and you're sitting at the top, like 99th percentile of all the people that know about crypto at all and have that kind of experience. So you could say that you have a decade of experience in crypto.
Well, I don't say that this wouldn't be fair again, because I wasn't like full time in crypto. So I wish I stayed back then in crypto, and like, but it was not clear. Like it was way more niche and like way more kind of more like this crypto anarchy vibes, you know, not like, which is almost completely gone today, you know. So crypto is kind of almost a normal part of the overall like economy.
Yeah.
There are no like anti-government vibes. Everyone like considers regulation, so like tries to legalize everything and so on. So like the vibe is very different. And back then it was like not clear where it all goes. It was like an online casino, something like that, you know. So
some people would say it still kind of is.
Yeah, this is true. Yeah.
Well, yeah, and with regards to the latest news, as you mentioned, there's a lot of talks of regulation. Crypto is in politics right now. Presidential candidates are being asked what their stance on crypto is. But what is your stance on crypto? Are you like a hard Web3 advocate, or do you believe that something needs to change for it to get the adoption that it deserves?
Well, I'd say both probably. I'm the advocate. I think it brings a lot of like positives, a lot of right things, like this self-custodial nature of everything, that you're holding your assets yourself. Like some random people cannot just confiscate your assets. And at the same time, a lot of things have to change, and probably privacy is one of them too, kind of pivoting a little bit to what we are doing. Today, so what we see, like, we discussed this a little before the podcast, that, like casino is a really, really big use case for crypto today.
Yeah.
And, because all the nature, all the blockchains, almost all the blockchains that exist today are public. And that's why it naturally just limits the use cases that you can build kind of on these chains. That, for example, like imagine you've got your crypto wallet and you want to pay for coffee using your crypto, something that like people had in mind like 10 years ago, right? And like you're paying for your coffee and your transaction is public, and like everyone knows that how much money you have, and like it becomes very dangerous, right? To use anything off chain, offline.
I was actually doing a video on that not so long ago. That video should probably be up before this podcast, so the link to that will be up here. But you're right. Everything that you do on the blockchain is on a public record, even if it is on a DEX, even if it is fully decentralized. You're still going to have a record of all of your transactions, of I guess your like digital footprint would be there. And people are thinking, okay, so what is the best way to use crypto then, apart from paying your coffee with it? But what would you say is like the best like end goal for having crypto and using it? Because then again, you have these kind of risks of, if you go on a centralized exchange, you go through KYC, you buy crypto with fiat, and then your government comes knocking and says, okay, so you bought this currency, you exchanged it, you sent it to someone else, but that someone else, we don't know what they're doing with it, and we kind of want to know. And we're going to have to block your account or something like that.
Yeah.
And what would you think is the best way to use crypto? Is it to hold it? Is it to trade with it? Is it to use it for payments? Like, what is your end goal?
Again, I'd say it's a little bit of everything, I guess, because crypto today solves like very, very different problems. So Bitcoin became kind of a legit kind of digital gold. So it's just one of the assets you want to probably hold in your portfolio, even if you just don't care about crypto in general. You're not a Web3 guy at all. It's just type of an asset, and which solves its kind of very, very specific use case. So let's say you want to run from the country tomorrow with with everything, and like what you can take with you, right? You cannot grab your apartment. You like your bank account probably will be frozen. Let's say you have some problems with the country you are trying to run from. Like Bitcoin perfectly solved this. Like even like all forms of digital gold, like centralized digital gold, probably do not solve it, as it's like, again, can be easily blocked, confiscated, like whatever, right? And Bitcoin solves because of its like self-custodial nature.
You're right.
But normal people can hold it as ETF or as anything else.
Yeah, ETFs are a very interesting topic too, because in early 2024, they got approved in the US. And I'm still in the gray zone of what that even means.
Yeah.
Because there's not a lot of things happening there, and there was such a big hype of it being approved, but what are people gonna even do with it? And yeah, it was just
it's not clear, but I think like the general narrative here is that this opens up the road for TradFi. For like funds that just like, all of them have to have very clear legal framework around any asset they are purchasing. And ETF is like something they can consider purchasing.
Something more or less regulated.
It's like regulated. And so it's clear how to deal with this asset for them. And something that is completely on chain, of course, it's for like smaller investors who are more like, have more risk appetite and
Yeah, well, there you have it, folks. ETFs are just bureaucracy, I guess. But touching on another topic and going back to the regulation, the battle of SEC versus CFTC has always been there for America, but I don't want to go too deep on that topic. I want to touch on the global side of things for crypto, because again, in one country, just like in the states of US, marijuana is legalized somewhere. In other states it's not. And then what if you're passing by another state where you suddenly get stopped by a cop, and what was legal 50 kilometers back is now not legal here. And it's the same thing with crypto.
Absolutely.
Because the UAE is very crypto friendly, but then you go to somewhere in Africa and people are getting scammed left and right there. And then you go a little bit up, and then you hit Europe, which is heavily regulated.
Yeah.
MiCA is finally rolling out, and that unified kind of framework actually lets you, have some kind of control and attract businesses. But businesses are still not going to be attracted, because here's a topic that I want to touch on. So a lot of people talk about crypto being this next big thing for businesses. Oh, you can open a business anywhere. You can have a whole franchise around the world where you can just accept one currency and that'll be it. But if you were a business owner, would you accept payments in different various types of crypto? Because I don't think 95% of them would.
Well, I think when it comes to business that is not crypto business, but just like normal business, it's all about stable coins, right?
Yes.
So this is like a huge thing. Like the growth is enormous if you see a chart. So stable is a huge use case for crypto in itself, for emerging countries, for cross-border payments, for a lot of things, because you avoid this volatility of other crypto assets. Yeah, and just to get back to your topic, when you your point, when you compare different countries, it's like sometimes with the example of the US, we can see even a single country can dramatically change its position towards crypto. And again, getting back to privacy thing, so Tornado Cash guys, they were completely illegal 2 years, a year ago. No one really wanted to associate themselves with privacy at all because of Tornado Cash case and their sanctions and so on. And now the stance completely changed, and we immediately can see the shift in founders' mindset, because privacy as a sphere, as an area, is very, very attractive. People see you can build a lot of things with privacy that you cannot build without privacy. And we see new products being launched in privacy space. So
I get it. I fully understand, because privacy has been a very interesting topic for all time's sake. Privacy was the main reason behind why Bitcoin was even made, if we're being fair here. And the way that battle is going on. I just wish to see how it unfolds, and I just kind of want to see a glimpse of what people are hoping for.
Yeah.
What's just wishful thinking and what's the reality.
Yeah.
And I think the reality is crypto is like mostly going to be dependent on stable coins again, because I ask a lot of people, it's like a little survey of mine. I ask a lot of people, how would they rather get paid? And 99% of them say, I'd rather get paid in stable coins. Why would I get paid in like Ethereum or Bitcoin?
Yeah.
Imagine being paid in Ethereum right now. Price of Ethereum right here. It went down significantly because of the latest news. And you're just working somewhere, you're holding a high position like sea level or something like that. You get an equivalent of like 2 Ethereums. But back when it was priced $3,000, you'd be thinking, okay, I'm making a lot of money here. But right now you'd be thinking, okay, so my salary got cut in half.
Yeah, absolutely.
That's not something that I want to do.
Yeah.
And that just brings me back to this topic. And again, with a lot of the people being in the blue about crypto itself and not really going into the side of DeFi, because DeFi has like 2-3% adoption in all of crypto, and you don't really get those kind of transaction volumes on a decentralized exchange compared to a centralized exchange. And so I think we're going to see in the future, that's like my prediction for 2030, everything is going to be so well regulated. Crypto is essentially going to be like a new bank, where all of your transaction data is still seen by the government, but the way you have your money is now not on a banking app, but it's on a wallet or something like that. But what's your outlook on the future of crypto? I kind of want to know.
Yeah, I think today we are observing kind of that the worlds of centralized exchanges and decentralized exchanges are converging. So, like take a look at Hyperliquid, which is kind of a decentralized, but at the same time has a lot of properties of a centralized exchange.
Yeah.
And we also see that Binance launches products that are kind of semi-centralized, semi-on-chain. So we will probably see really these two worlds converge, because there are both like advantages and disadvantages for both of them. Because you mentioned like the penetration of DeFi isn't that high. I think this is a problem of Web3 in general. The learning curve kind of and the UX kind of is not something that you are used to.
Don't get me started on the UX. It's so bad.
Dealing with your private keys, seed phrase, wallets, and everything. It makes things really complicated for a regular user.
True.
So what I believe is that we'll see these kind of hybrid solutions that are semi-centralized, semi-decentralized, with really good UX, like mobile-based. So in the US, we saw that like Solana wallets, like Phantom is really head-to-head competing to Robinhood app, which is like a TradFi app. So and Robinhood like announces RWAs and all kinds of products that are usually associated with crypto. So we see kind of TradFi moving closer to crypto in a certain way, and crypto tries to become closer to TradFi in terms of accessibility, UX, and
Yeah, you're right. That brings me to, maybe I just thought of a startup, but mixers, right? Mixers are the things that, So imagine you have a bag, you throw your marble in it, and like 10 other people throw their marble in it.
Yeah.
And then you mix that bag and you take out a marble, which you don't know if that's your marble or not. And that was one of the kind of ways to enhance your privacy in crypto. Essentially, going over your steps where you walked on snow and something like that. And that's the thing. That's the thing that I was researching too.
Yeah.
And I guess mixers are gonna attract more and more attention to themselves. But what do you think?
I think that in general, mixers is just like old-fashioned Bitcoin mixers, Ethereum mixers. It's just an answer to the absence of privacy. Because kind of blockchain is the way it is built, the way it operates is public. But today, not even today, I think like 10 years ago or so, when first chains like Zcash and Monero appeared, that have these privacy features just like built in. So they use slightly different, well, very different cryptography.
You're reading my mind here because I made a video on that link here.
Okay.
Please continue.
Yeah. Zcash and Monero, which basically sell privacy preserving Bitcoin idea. And well, they found their like PMF for sure, because and it's also interesting again in terms of regulation, because Zcash and Monero, you can do kind of the same thing, do private transfers, but Zcash is considered to be good. Kind of it's traded on Coinbase. It's like, it's okay. So it's fine. It has like public founders, US based founders, and Monero is banned everywhere. It's like black market, guns, drugs, and so on. And like, yeah, so the tech
but
is
still
kind
have
of the same.
Yeah.
The tech is kind of the same, but just like the perception is very different.
Right.
Yeah, so these were kind of, and maybe, to better explain privacy to our listeners, so we can kind of, set up a framework, because in the very beginning, Bitcoin was kind of considered to be private, right? Because like, no one knows what your address is. That was like the understanding back then in like 2010, 11.
Unless you manage to get that Bitcoin without, revealing your identity. Because then again, if you reveal your identity on a centralized exchange, you buy some Bitcoin there, and then you go on a DEX, you're still connected.
Yeah. It's just like, it took some time for people to figure out that like, that was not privacy. It was like so-called pseudonymity, where you have your address and just people don't know that this address belongs to you. But in reality, when you start doing something, interacting, like, as you said, with centralized exchanges, with like, start to do something with your crypto, you inevitably reveal your identity. And once it's revealed, like in one place, you can be tracked, like your whole blockchain history can be tracked back.
You're absolutely right.
Yeah,
I actually made another video on that. So you're reading my mind here again, Max. That's insanity. Link to that video will be here. I was making a video about is crypto really anonymous?
Yeah.
And I came to the same conclusion that again, when you just sit down and when I was doing this test and when I was going on a decentralized exchange, I understood that. Well, first of all, I need to transfer that money from my centralized exchange, from a wallet that I'm using, from my custodial wallet on Binance. And that kind of connects me again because I did a lot of KYC checks there. And I'm not really that big of a fan of DeFi, and I'm not using all those DeFi products. But yeah, I came to that same conclusion, and I was really amazed by how vague this really is. And I included some tips on extra layers of privacy there. But that brings me to the topic of Bitcoin again, because right now the dependency on Bitcoin is very big, and even more so because of all the things that are happening in the US. All the tariffs and all the political shifts there, and the lack of expectations now, I guess, because a lot of the people thought that, there's going to be a big hype. The summit in the White House is going to bring so much attention to it. Meanwhile, no one is literally talking about it. And so I want to ask, with these corporate giants like BlackRock, Fidelity, JP Morgan, Goldman Sachs, they're all leaning into crypto now because they understand that's where the money is. And they understand that, okay, that's where people are going, so we're going to go there and try to get our share. But what do you think is going to be the capital of crypto in that term? Like, is it a battle between US or the UAE?
Yeah, naturally, kind of crypto should be decentralized, and there shouldn't be a capital. Because, when things become over-concentrated, like they over-rely on some particular country regulations, it's like it becomes very, very dependent naturally.
Yes.
So this country changes regulation and kind of the whole sector is gone. So I think we'll have several kind of points of attraction where people will be kind of, where countries will just, think more about crypto as the way, for smaller countries, it can become a significant kind of advantage over other countries, and a significant source of income. From crypto, and like we know Salvador plays around with crypto a lot.
They made Bitcoin legal tender. in El Salvador. You
like,
could actually pay with Bitcoin there.
Yeah. Yeah, I think they kind of change. Well, like paying with Bitcoin is more of a marketing, as we discussed before. It's like it's crazy. Like no one wants to live in this world where you don't know how much money is in your pocket. Like I mean, your everyday money, not your investments, but just like the money you want to spend tomorrow, right?
Let me pay with 500 satoshis for my coffee.
Yeah.
Which would roughly be around like the good price for a coffee, like $1 or $2.
Yeah.
But I mean, I fully agree. I also want to add to the topic. I also want to add to your answer because it was absolutely perfect. It was actually what I expected, because I want to bring up a topic that I will be discussing next. Countries like Nigeria, Argentina, for instance, we made a video on that. They're actually seeing the best crypto adoption possible because, again, they're trying to. How do I say this sentence without getting banned on YouTube? that would be a very tricky one. But there is, of course, a dependence on a national currency wherever you are, and inflation and unstable economies. All the political turf wars between candidates. They all play like a significant role on the price of that national currency. You take Venezuela, for example, and any Venezuelan would happily take payment in crypto if they're doing work. And that's the kind of saving grace that these people are actually kind of experiencing right now, because again, you can open up a wallet if you just have a mobile phone and a crypto wallet, and they do these sort of odd jobs where they're filming content or they're doing something that is considered like a very like easy task, but it needs to be some sort of there needs to be some sort of automation on it. Like, for instance, business development managers could use the help of people, delegating their work of, finding databases or finding a lot of leads for them, and they pay these people, and they're getting the money. Yeah, because in their national currency it would be a heavy miss. Yeah. But this brings me to my topic of again, this dependency on crypto too, because I see a shift where so right now we're in this sort of kind of balance stage. Crypto is dependent on TradFi is dependent on crypto too, because if TradFi doesn't follow where the money is going to go, I mean, they're obviously going to miss out, and they will not allow that to happen, because again, we kind of know how dark things can get. In South Korea, Samsung is like a very big chunk of the GDP, and so it has this kind of state control kind of too, allegedly. I'm not making any claims. But then again, you have Samsung as a big player, and that can also translate into crypto. And I have a prediction that crypto will never be, I guess, like more private than it is right now, because we're seeing this race of regulation. But I'm curious to know, what do you think? And this is going to go into the question of your company about which is based on privacy. But I'm curious to know, where do you think crypto will go? Will it get more regulated? Will it kind of have this freedom?
So, as I usually answer today to your questions, I think it's both. It's both privacy and regulation. It goes together, because I think privacy. When you think about privacy, kind of, it's not for like criminals to launder their money. Obviously, it's an obvious use case for crypto from the very beginning. But I don't think this is like the only reason why we should have privacy on chain. And like regulate privacy, because we have problems with centralized exchanges, right? And they're because they actually today they're kind of unregulated banks, at least like less regulated banks.
That's actually a very good way to explain a centralized exchange. You're right. I mean, you do pass a KYC check, but if you don't pass it, you're just gonna get blocked on that exchange. And then you go to DeFi, and then you're still able to use it. So it's kind of it's like a rat race.
And it's like it's hard to know how much reserves this or that exchange have. So like FTX, like 3 years ago, showed this very well. And it was obviously not the first case of centralized exchanges like blowing up, going bankrupt, because there is no as strict control over their reserves and like. I think that like, and what on-chain, what blockchain gives us, it gives us like programmability. So like we know, well, everything is governed by smart contracts. So if we kind of verified the smart contracts, so like audited or did whatever, we can be pretty confident. So we don't have problems with like on-chain protocols like Uniswap or Aave. Like we understand that the money is locked there. Like their founders cannot just like run away with this money, that even though they have like billions and billions of TVL. So we have this problem, right? And so here, where I see like on-chain privacy is basically something that has positive sides of centralized exchanges. So like you can operate it basically in a more efficient manner than a decentralized exchange in terms of UX, in terms of KYC checks. So more like, and at the same time you can enjoy this verifiability, right?
Yeah.
So kind of everyone knows that you are solvent and so on and so on.
Solvent is a very good word.
Yeah.
Like,
yeah. So this is where I see kind of, and again, this like converging of two worlds hopefully ends up like somewhere in this position where we at least kind of have some control over like the
assets.
financial part of the exchange and like other DeFi.
You're absolutely right. And
financial.
Yeah, I get it. That also expands on my vision of how things are going to go. Because to be fair, I have to admit a very controversial thing. I don't hold any coins or tokens, and that's my kind of choice. Because again, trading is a very difficult topic for me to understand.
Yeah,
and it's also going to translate into a question that I have about your company I guess your project about trading, so social trading, sorry.
Yeah.
And this kind of gives me that freedom, because I think of myself as an avid crypto researcher. And this podcast truly helps, let me tell you that, because learning about this technology, I came to so many good things that could be used with the help of the blockchain technology that are not financial. So again, when we're talking about supply chains, when we're talking about the some kind of immutable database, for instance, for holding data, not just data about transactions of money transfers, but actual valuable data that could, for instance, be very useful to people in the future. Like there's this bank of seeds in Norway somewhere where you have essentially every type of seed in the world for growing plants in an Armageddon scenario.
Oh,
yeah.
interesting.
So the use cases are very different and vague, and that's why I brought that example, because again, you can use blockchain for so much more, but 99% of it is in finance.
Yeah, I think
my fascination goes towards that 1%, because again, it's not going to be this very monetary type project that you're going to build. If you're actually going to do something like a lot of the health startups, startups that focus on health and IT, for instance, AIs to scan your lungs or something like that, they're more or less like non-profit. There's never going to be a non-profit in crypto, like ever. But what would be the use case for it? And that brings me to my question. What do you think is going to be that number 2 in crypto that is not financial? So what's going to be the best use case for crypto from cryptocurrency coins?
This is an interesting question. And during kind of hardcore bull cycles when everyone is excited about blockchain, we saw a lot of attempts to build something just like something on a blockchain.
Yes.
But so far we are yet to see something that that played out well in this regard. But if you ask me, I think something dealing with your identity.
Oh, you got me there. I was thinking about that.
You have a video about this, right?
No, but I will. Max, you're reading my mind here, because I had exactly that topic in my mind when I was asking you that question, and I'm thinking, okay, this guy, he knows what he's talking about. just take it away and let me hear that gold that you're about to pour, because this is going to be very useful for all the listeners too.
I think that identity is a good use case. Obviously, well, privacy comes here into play for sure. But yeah, imagine you have like your passport that is on chain, that is like fully non-custodial, like it belongs to you, right? And you can reveal just certain portion of data from these, like you can like for example with zero knowledge tag, right? You can prove something without revealing it, right?
Yes.
So you can prove you are over 18 years old without necessarily like showing your passport like with all your data, which is like super annoying today, right?
That is true. That is true.
Yeah.
And you can connect that digital identity to other services. You can have your medical record on that digital identity. You can have your banking cards or any crypto cards that you have on that identity. You can have your bus pass, for instance, or the subway pass that will identify you as a student and actually cross that, promo code or whatever you want to call it, because you have to pay less if you're a student somewhere. So that kind of discount automatically passes. And for elderly people, that could also be like a very interesting thing, because if you're like a war veteran somewhere and you have these kind of special privileges that you have because you served your country for so many years, you don't have to whip out like a card to let the bus driver know that, oh, I'm actually getting this discount because I served in the army for 30 years. I think I kind of deserve it. And you don't have to prove that. But I think life would really get easier if we did have our digital identities on the blockchain somewhere. Because coming back to crypto, the main use case, like 99th percentile use case for people to do essentially anything on crypto is to buy crypto. And the process of buying crypto is you first go onto an exchange, usually let's say centralized exchange. You have to pass a KYC check. For that, you have to do a photo like this, or actually whip out your physical passport and take it like that. But imagine you had a browser extension that allowed you to have your passport on there. You click one button and then you're in.
Yeah, absolutely. And
that would be best.
It's very annoying that like you have to redo the same thing with KYC on every possible platform. Because I would like really to just have a service that is decentralized, which like where I pass all the KYC, kind of upload all the necessary docs, and then I can just use it like everywhere basically without revealing again all the data like to a certain exchange. Which
you're right. That's a startup idea right there.
Yeah, a bunch of protocols are trying to build something like that. Like it's usually some form of ZK passport, ZK pass, Z pass, or whatever.
And the problem they struggle with again is that monetary gain, because you can't have transaction fees on passing a KYC check.
I think that crypto offers a very unique and approachable way to monetize everything with your token, right?
Yeah, that's true. But utility is the next problem.
Yeah, utility, but like, today we live in this like attention economy, and if your name is well known, then you can issue basically this token without any huge value associated with it, without any utility and so on.
Celebrity tokens. We did a video on that.
This is a bad example, I'd say. This is obviously just a gambling, and usually most people lose.
Sometimes it's good. 1 out of 100 celebrities will actually have like a decent token.
Well, I'm not bullish on this one at all, to be honest. But yeah, so again, it probably serves its has its role kind of in the whole crypto. So it just attracts some attention, probably some new people on board because of their celebrity, like they're following on Instagram.
Yeah, true.
Just launch some token. But I think all in all, as all these tokens have like a very similar pattern in terms of like their price.
When it goes like
goes up, and just like boom, and like it will lead to more like disappointment probably than anything else.
You're absolutely right.
And but if you think of stocks, I mean, not all of them like generate revenue, like paying dividends, right?
Yes.
There are a lot of stocks that just, hey, we are not paying dividends because we will grow in the future, right? And if you launch your token that is associated with your company, well, it can be kind of the same, right? I wish there were more kind of structure to launching tokens that you eventually you understand you are capturing the growth of the company, because today it's sometimes too disconnected, I'd say. Like Uniswap as a company is doing great, generates a lot of revenue, and their token does not necessarily capture all this value.
Well, that brings me to a topic of what affects the cryptocurrency's price, because the things you mentioned played the main role again. Because if you don't have great utility for your token, if you don't have a good idea behind it, if you don't have a very great ambassador that's going to promote it, there's essentially never going to be any demand for it, because this market is facilitated by the demand. The main meme that I see always on Reddit, I go on Reddit for crypto insights, usually on trading, because I wanted to kind of know what that is.
Interesting.
So you've probably seen this meme where there are two queues, two windows, and one window is has no one there, and the other window is filled with people. And that window has, the one that's filled with people has buying crypto when it's up 20%.
Yeah.
The other window is buying crypto when it's down 20%.
Yeah.
And so you never see people that actually buy when it's down.
Yeah.
Only a very small amount of people do that, because they have to consider the risk of investing into something.
Yeah.
And people are never gonna buy a token that goes down 15% from its original price, unless it's Bitcoin and unless you're a president of a certain country. Yeah. No shade thrown here, allegedly. But I kind of forgot what I was going to ask with that question, because I got sidetracked with my presidential joke. But you get the point. And so you don't have the utility, you don't have the support. But even if you do have the utility, even if you do have the support, even if you have 1 million of users, those 1 million of users can still be affected by the news. They can still be affected by, the situation in their own country. And there are so many factors that play a big role when we're talking about the price of the token. But what do you think are the top 3 for you? What would you say moves crypto the most, I guess, would be that question.
You mean moves crypto in terms of
its price? Yeah.
In terms of its price.
Will it go down? Will it go up?
I have no idea, to be honest. The honest answer would be this. Yeah, I'm no expert in trading. I'm not a trader, right? I'm not So I'm a builder. So I'm a founder.
Like a developer,
this is what is interesting for me is to build products, do stuff. So I don't have any good advice in terms of trading. But don't buy high, don't sell low. But
Again, this is not financial advice
by any means. Yeah.
But this was actually the answer that I expected from you, because a lot of people that I asked this question. They tend to be sneaky about it. They tend to be pretending like they know something. Oh, Bitcoin is never gonna go up again. Never invest in Bitcoin. And I have this kind of hate for people that have this sort of confidence. And I knew firsthand that you would say, with the amount of experience that you have, that answer would have been very obvious. And I'm very glad that it came the way it did, because again, when you're talking about trading, when you're talking about the fluctuations of price and what affects that price, there can just be 1 million things there.
Yeah.
And that was actually a very good answer.
I think in general, in crypto, you can earn money if you kind of are deep into it. You can earn it in trading. I think there is an alpha there. It's way harder to do this in traditional markets where you are trading against Morgan Stanley and other huge investment banks, trading firms, with analysts and everything, and like high frequency traders. So
Yeah.
there it's like more about luck or long-term investment. In
True.
crypto, there is like, yeah, the market is less mature, and there is less capital. There are less big players. So I'm pretty sure in crypto you can earn by trading, but it's just, yeah, I don't know how to do this.
I think the better ways for earning would be staking, yield farming, and essentially, but trading is a part of that.
Yeah. So it's like, yeah, it's two different things. Yeah. So DeFi is one way of trading.
Yeah.
And there you also have to understand what you are doing, right?
Yeah.
Because in a lot of cases you're getting like profits in some tokens that are likely to go their prices are likely to go down because like they're issued, a lot of them are issued as rewards. So you have to understand everywhere what you are doing, what the risks are, but when you see that something that looks like free money, this is like yeah, probably you should spend more time figuring out how it works.
You're right.
So there must be some risks associated with that. But yeah, with all that said, in crypto you can have I think more more profit with less risk. But well, you always have this like hack risk, for example, that is totally absent in TradFi, right?
That's true.
It's like, oh, like our bank was hacked and all your money is gone. Like in TradFi, you have other types of risk. Like our bank went bankrupt, and like you get like 10% of what you hold in this bank,
You're
held in this
absolutely right.
bank. Yeah.
I want to further support your answer by saying that the best advice that I've ever heard in crypto, and essentially what stopped me from getting into trading and trying out these new ways of making money, was there are no winners without losers. And when you really think about it, you're coming in with like a clear mind and thinking, am I going to be the winner or am I going to be the loser here?
Yeah.
And to be that winner, I have to do so much more. I have to understand so much more. And when I know for a fact that I don't have those tick boxes checked, for instance, I don't know this about trading, or I don't know this about trading, or I have not followed this news that would actually, give a token that I want to buy a surge in price, and then I would be in the profit. And I understood, okay, I'm not going to be the winner there. And with that kind of level-headed, conscious and clearance of your mind, that's the best way to get into crypto and to understand what you want to do with it. I mean, I enjoy doing this podcast. I enjoy researching. I enjoy writing, articles. I enjoy making videos. And this has been my bread for crypto. And that's my type of way of earning in crypto. And I guess it should be the same for a lot of people there too, because again, there are no easy ways to make money. You have to always put in hard work. You have to invite expert guests to your podcasts and have great conversations with them to make money. So that's the kind of best advice that I would give. Oh, and also coming back to the topic of what we were discussing, I wanted to shift the dynamic of our conversation and give you the space for presenting your projects, because I'm very eager and curious to learn more about them. And so I want to start out with the privacy-based one, because that will sort of very well go into an evolution of this topic. So
I think
please tell me about it.
Yeah, we kind of touched upon this topic already. So yeah, basically the idea is that you have with private decentralized exchange, you have both positive sides from the both world. You get the best from both worlds. So it's like both from DEXs, you get this programmable verifiability, so to speak, where like everything is governed by smart contracts. You won't be rugged by the management of this exchange. And from a centralized exchange, you have a privacy aspect. I know today a lot of people who are even who live on chain, sometimes they don't want their several wallets to be linked to each other, right? And track that they might belong to the same person. They use basically centralized exchange to just hide their money. So they deposit to centralized exchange from one address and then withdraw from another to another address. And
Right.
basically, yeah. So they use a centralized exchange as kind of a mixer today. And what we want to do, we want to like just eliminate centralized exchange from this from like the whole picture, right? So you can remain on chain, you can remain self custodial, but you can become you can obtain privacy, so like people cannot track what you're doing. And this does not necessarily mean there won't be some form of KYC, but because obviously you still have to think about like criminals using your products, right? But like normal people just will be able to use it, or able to use it. And we are actually on the mainnet like for half a year or so. So I think we process like 1 million transactions or so by now. It's the name of the blockchain is Alio. It's like not the most well-known blockchain, but it was launched like half a year ago, and they have built-in privacy basically. So privacy with smart contracts. So think of like Bitcoin, like no smart contracts, no privacy. Zcash, privacy but no smart contracts. Ethereum, no privacy but smart contracts. And here you have like the combination of
Both of them.
Yeah.
Oh, that's actually very good.
And there are a bunch of other chains that are being built in this similar fashion. So people are actively like, this is a very active space in terms of research. People are figuring out how to do that because it's like a very, very modern cryptography. So you have to solve a lot of like engineering tasks, like to make this thing work like really fast and reliable, to have a good UX. Because one thing is like having something that works, and another thing making something that is convenient to use, right? So we are on this path, and we are exploring all kinds of products. We'll also be building the product that will be very connected to all the other chains. So now we are kind of more in the local country, like people compare blockchains to countries. So like we are inside Alio country right now.
We're Vatican.
Kind of, And now we want to open up this like non-custodial privacy to all the other people on other chains. So this is our basically main direction with this product right now, so that you can easily like have your money on some chain, just like, okay, I want to make it private. So you press a button and your money moves into like your private space, where you can also kind of invest them into some DeFi protocol, like do regular things. If you want to use them again on a public chain, you want to like ape into meme coin on Solana, you again like move it from your private zone and put it on Solana. So it's like, again, it becomes very similar to a centralized exchange in a way that it's like it's private, but it's not centralized. It's still self-custodial. You know that like you won't be randomly blocked, because like you hear a lot of stories just like someone had like a 200K on Gate or on some other exchange, and it just got locked, and they are like trying to figure out, and it's not very clear like where you should go, where is their office, like where should I complain, and
you might not even see that money for a very long time,
if ever. If you don't have like connections to people, it's really hard to like put enough pressure on these centralized entities, because they usually have some like legal entities somewhere like on Bahamas, like BVI, whatever. Like it's very, very hard to.
And that's the double-edged sword of crypto, because again, it has this inherently global nature to it. Because again, you might have your exchange that you're using somewhere in America, but you're way out here in Europe, and I mean, you're never gonna have any chance of issuing like a legal complaint to them, because then again you're not even a citizen of the country where they are registered, and that's the kind of thing that bugs me out. But if we're being honest, and if we want to relay a clear message to our audience, privacy is not about people not knowing how much money you have, or passing a KYC check. Privacy is not about hiding your transactions. It's about having self-custody, as you mentioned.
Well,
and that factor that you mentioned is like the perfect example. you can get locked out. And people go for privacy because they don't want to get locked out. They want to know that their money is their money, and that if their money is on an exchange somewhere, it's still their money. It's not the money of the exchange. Because if you essentially, an example with TradFi, if you put your money into a bank as a deposit, that money essentially is used by the bank to facilitate new business.
Yeah.
They will give your money as credit to someone else and then make money off of that money.
Yeah.
So the money that you have in a bank is essentially not really your money. They have a promise that they will give you back that money, but essentially it's just a bunch of other people's money that they use to go out and give other people out money, and they'll make more on credit, and they'll make more on all their other products that they're using, like the ATM machines and stuff like that. And I get it. It's kind of really good, but still it's going to be very old. And I kind of predict that, with the death of cash that is happening very, very evidently so in Europe, in America, the same thing is going to happen to a lot of other countries, and we're going to see this big shift towards crypto because, again, people are going to think, okay, so I have this choice. Do I go TradFi? Do I have my bank account and have this middleman, the intermediary, pay higher remittances, and all the other stuff that we have in banking? Or I just get a crypto wallet. I have my money there in stablecoins. So, naturally, my kind of net worth is going to be a bit more stable because, again, it's going to be in US dollars, for instance, and I'm living somewhere out in like a third world country. And the choice is going to be obvious for people unless they're educated about it. Because, again, we always think that, okay, the thing that's easiest to use, the thing that's, advertised the most, the thing that other people around me use, I will also use because there's this herd instinct for people. And I think you made a great point with saying that, again, if we want to take the best from both worlds, that's essentially what your answer was, that we have to combine and take the best from both worlds. And I couldn't have been happier with an answer like that. And I'm curious to know if there are any promo codes that people can use to register for your service, because you have a chance to put the link down in the description. So don't miss out on that.
This is an interesting option, but it's not very common for Web3 products. I think it's just not in the DNA to have promo codes. It's everything is permissionless. Like when your smart contract is deployed, people don't even have to use your front end, your web app to access it. They can use it directly. So it's not very common to have any promo codes, to be honest. But we'll put down some links for sure.
Absolutely. And then moving on to the next project, which was social trading. I'm really curious to know about it. I will not be telling any facts. I will not be laying a groundwork for this question. Just imagine I'm a complete noob. What would be the kind of elevator pitch that you would give about it?
For sure. So basically, as we discussed before, in trading, there are you can earn money in trading if you know what you are doing. If you're using crypto terminology, right? If you're a degen, if you are in trenches, you know what's going on with meme coins, how protocols are working, and everything, everything, you can earn money. But today, there is no easy way to basically to share this knowledge with others, right?
Yeah, true.
So kind of there are a lot of KOLs on Twitter, and I was a little surprised when you said you went to Reddit to figure out something, because crypto basically lives on Twitter, on X, sorry.
I just use it for memes, honestly.
Yeah, okay.
That's where I saw that meme with the 20% dip and the 20% up. I mean, Twitter is hell for me, honestly, because I read some people and I followed some people and what they were saying, and it's essentially the same thing. Everyone is going to be reporting on the fact that Donald Trump this, Donald Trump that. Elon Musk is not going to use doggy.
Yeah, I spent a lot of time working on my timeline. And like, of course, you cannot like
That's what
directly.
you have to do.
Yeah, you have to like write things, like subscribe to certain. Yeah, this is like mostly I'm mostly in this like builders community. It's not like regular like KOLs, influencers that just say something for a broader audience.
Yeah.
It's like more of an inner circle inside industry. But yeah, getting back to what I was.
And they heavily promote stuff too.
Yeah, they're
Money
heavily promoting stuff, and like you never know. So you're following someone on Twitter and then say like, "Hey, buy this token." Well, did they pay him? Likely they did. He might be holding already a huge bag of these tokens, and like you are their exit liquidity basically. So our goal is to try and fix this. So basically, with a platform where you can make your trading kind of portfolio public, and not necessarily public in the sense that you're like publishing what you're doing, but you can say like, hey, here are my wallets, and we start automatically tracking their performance, and other people can also join this, like start copy trading these people. There are a lot of copy trading solutions today on chain, but they are all like permissionless. So just people are trying to find so-called smart wallets that are like doing trades with profits, and they are following them in a permissionless manner. But it always like ends up bad, because people who are being followed, like they don't have any incentive to behave in a fair way. Right, so they will try to trap you, to dump on you, and so on, because there is no like reputation basically. So they're like, okay, they just like stop trading at a certain point, switch to another wallet, and like the story continues, like repeats basically. So they make some profitable trades, people start following them, and then they rug these people basically. And what we want to do, so we want to build we've built actually already a platform, and it hasn't been yet launched.
You got lost in 3 timelines there.
Yeah, because when you're pitching something, you're used to like you start pitching from the very beginning when you have nothing. But now we are at a point where we'll launched one product, so we are about to launch the other one. So all these portfolios, everything is public, and like there is a reputation. So you care about your reputation, and you earn from the profits of your followers basically. Right, so you have incentive to trade in a fair way, trying to make profits, so that your followers make profits, and you earn if they are like successful.
Wow,
right.
That's actually a great idea.
It's kind of copy trading. You can think of kind of a mutual fund even thing, right? Where people just like, okay, I believe in your ability to trade, so I give my money to you, but I'm not like just giving it to you in a way that you can run away with this money, right? You can use it for trading. You can spend it only for trading, right? And this is basically the product, the second one.
So you're making both parties dependent on each other. Because with the success of one, the other will be successful.
Yeah, absolutely.
And with the trust of one, the other will be successful, and the other will have funds.
Yeah. So we are trying to fix this like dynamics, make it less like P2P when people trying to like fight against each other, in a more like collaborative, like more kind of more fair manner.
Oh, I can get behind that. It's like a general leading his army into battle. Trying to win it. That's the kind of analogy that I got there. But I do like the idea. I think that's actually a really great concept, because when you think about it, I mean, it's done in the normal world where people are actually giving their money to people that they know, that have the knowledge of the stock market, or have the knowledge of fighting, for instance. So someone is a fighting analyst. They watch a lot of UFC. I mean, I watch a lot of UFC. I have my predictions for UFC fights, and I could essentially be that person to lead the other group, because my predictions are usually right. I have like an 80% win rate for all of my predictions, because I'm a very big fight fan, and I like watching fights. I mean, I did a lot of training myself, and that's where the passion was born in me. So I don't ever bet on anything because
Yeah.
again, I know I will get addicted. I will not get off that hook.
Yeah.
And so I'm not doing it, but I have my own like registry of the things that I had in terms of predictions. And yeah, my win rate is looking at about like 80%. And those 20%, they are usually the fights where something crazy happens.
Yeah.
You know, some fighter comes in with an injury. Some fighter had been sick, you know, a week prior to the fight, but they could not pull out. Or you know the whole fight got changed or canceled, and that's where things get really interesting, and you have the one trick ponies, and so yeah, I'm resonating with this idea that you're proposing because again, that sort of helps alleviate the stress from the people that don't know anything about trading but want to get into it. They want a piece of the cake, and then that gives more incentive for people that are experts in this, and they get their work valued because again they're experts, and that's how usually things go. When you're an expert in marketing, you do webinars about marketing. When you're an expert in cybersecurity, you do webinars in cybersecurity. You go out, you share your knowledge with people, and I think that's the kind of best way to put it. And yeah, I couldn't have been more happier with the product pitch there. And I got to tell you, if I was an investor, I would definitely consider that. Not investment advice.
Yeah.
The big disclaimer right here.
Yeah, but again, so yeah, we are trying to build, you see, like we are trying to build a platform for other people to trade. So we do not pretend we know what to buy, what to sell. We just want to help people to organize in a way that is like productive for all the participants.
And that could not have been a greater idea with a greater passion behind it. And yeah, I like what I heard today. I think we have learned a lot, and our dear viewers and listeners, if you're listening to this on Spotify, I mean, a lot of great insights from today's podcast. But we're just about going to wrap it up, and I want to tell you, Max, that you have been an amazing guest, and I couldn't have been more happier to have you here on this podcast. And I want to tell you that, again, when we're talking about all these things, when we're discussing these topics, you have managed to stay very neutral, and you have managed to put out only the best parts that are, of course, in this world, and in this world of crypto, I mean, not in general. And I like what I heard today, and I hope that is the case for our dear viewers too. But before we go, there is going to be a last message from you, however long you want to make it. You know, just sending out your good wishes to people, what you're hoping for in crypto, and your kind of CTA for the projects that you're building. Take it away.
Yeah, for sure. When it comes to CTA, yeah, I think we'll just put some links down below, like follow us on Twitter and try out our products. And yeah, when it comes to a message in general, so yeah, be cautious in crypto. There is more scam in crypto than in your life on average, but there are more opportunities. So it's like a risk reward thing. But yeah, if you like want to onboard into crypto, just like go slow, like step by step, like try with smaller amounts and everything. Try to learn, try to understand. Like don't necessarily believe like everyone you hear, everyone and everything you hear. But yeah, all in all, it's like a very, very exciting world, and I'm pretty confident like it will grow just naturally because, as we discussed today, there are so many great use cases for crypto. Yeah.
That was absolutely amazing. And that's the type of message that I send always, but you kind of stole it from me. I always say that people should stay safe and stay cautious and actually do research, because this topic still is very fascinating, and the world of crypto is a very interesting dynamic for you to watch, to research, and to be a part of. And I think all the people can make decisions for themselves. But still, if you're into trying to learn something new, if you're into trying something new out, I mean, if you want to try trading, you can start with like $10. Not investment, not trading or investment advice again. But yeah, you can skip 1 or 2 coffees that you drink a day. Take care of your health, and try something new. And this is the most fascinating part about this. So yeah, thank you for being our guest. And thank you, our dear viewers, for being a part of this podcast. We'll see you next time. Take care. Stay safe, as me and Max are going to tell you again and again and again. And yeah, goodbye.
Bye-bye.